Hi friends, good week. Vladimir here with you. Welcome to our weekly review for the week of 14th of February 2011. Well, the last week was a very volatile one, and the finish was with the US dollar strengthening. And there are many reasons about it uh, for that, but still, it does not look like a real strengthening of the US dollar, and I will explain why. Before I go over the charts and over the pairs, I want to go for the US dollar index chart and try to explain what I mean. Well, I've been talking for the last few weeks about this line, right? I've been talking for few weeks about this line. It was blocked, as we can see on the previous week. We had this double doji, and on the last week we even had this kind of engulfing, right? Kind of engulfing. It's difficult to call it engulfing because it's engulf only two dodges, so it's not really engulfing. But still, it makes the sign for the U.S. dollar strength and continuous strength. But is that enough? Well, let's look on the MACD. After such After such a pattern, double doji with with wicks, as you can see here, of below the body, right? It's a bullish pressure because we can see on this double doji bearish pressure during the week, but bam, bullish up move, bullish pressure during the end of the week, and an engulfing. But still, the MACD slope is going down, as we can see here. You see? The MACD slope is going down. It's definitely not so clear sign for the future because the slope should raise up, as it happened here, for example. 3 doji, as you can see, right? And the slope moved up after this engulfing. Look what happened, right? Okay, so actually, it's kind of a warning signal. I do believe that the US dollar will continue and gather strength few weeks, during the next few weeks, but I not think it will be clear. Well, I don't think as for now. It might surprise me during the beginning of the week, but still, as for now, from this chart, I don't actually believe it will be clear and up move. If I go to the daily chart, what can I see here? I see a clear sign of up move, right? You can see a clear sign of up move, a beautiful slope up, right? But meanwhile, I can see also, as you can see here, I can see also a hidden bearish divergence, and I will mark it for you, right? It will stop, while this correction will stop somewhere on the Fibonacci level, right? We have this, as you can see here, right? We have this potential bearish hidden divergence, and it might push the US dollar down again. So that's why I'm not actually sure about this the weekly chart. I do believe it will continue to move up somehow and push the prices up, but I'm not sure it will actually change the whole thing because of the MACD. MACD still does not grow, and it's not a clear sign. It's a bad sign actually. Okay, it might rise again, maybe to the daily resistance here, maybe even then for the next resistance of the weekly chart here, right? But let's see how the MACD will be developed during the next days. And now for the chart. So that was my picture, my opinions about the US index, and now about the chart. This is the British pound, and I want to start with this one. The uptrend line, the short uptrend line, was broken during Friday, but the support line around 160 still not. The MACD crossed down, the stochastic is pointing down, the RSI still above 50, but it still looks like a bearish sign. I do believe that the British pound will go and retest 158 again, somewhere between 158 and 158.50, maybe around these levels. Okay, actually, this will be my target somewhere here. Okay, around these levels. This is the actual resistance here, right? So I do expect the British pound to continue at these levels. Will it go down more? Well, for this, let's go for the weekly chart. On the weekly chart, we do see this bearish divergence, right? If this bearish divergence is about to happen, that means the British pound could actually go all the way to 154 again. But will it? I'm not sure. As you can see here, the situation now and the situation on 2000 at the end of 2009 are almost the same. Can you see? Can you see the same divergences here? Right? That's the bearish divergence. So the bearish push is here. We also got this harami, right? The stochastic also crossed down, but but the MACD still somehow little raising up, as you can see, little raising up. Not clear situation, definitely, but let's see again how it developed around these levels. Okay, we actually have this one more line to be broken here, right here. One more line to be broken if we want the British pound to really fall down. Sorry, this is the level, right here, around these levels, right? The close price of the weekly chart. So actually, let's see how it will develop. Uh, if and this is the resistance, of course, 162 actually the resistance. The real bullish move will begin only if uh, the weekly chart will close above 162. If so, we will see the up move. If not, we will probably have a real down move. Okay, the divergence is here. The divergence is here, but because of the US dollar index chart, it's not so clear as it was on 2009. What about the euro dollar? Triple dodging. Triple dodging. What does it mean? What does it mean? Actually, nothing. The last situation that happened, it was here, right at the beginning of 2010. Actually, we had 4 dodging. What happened now? They tried to break up, it didn't succeed, broke down, and continued down more. Will it happen now? No one knows. The crisis about on euro is still strong. Nothing clear there. Well, on the daily chart, the daily chart does point for the continuing of down move. I do expect the euro, as I said on the previous week, I do expect the euro to retest 134, maybe little low, higher, 134. 20, for example. I do expect it to be there, but um, there is nothing we can actually point and say from now the euro will raise and from now the euro will go down. If it close again below this level, then I actually could expect the euro go to 131 level again here for this uptrend line. If it breaks down again this level, then yes, I could expect the euro going down more and more. Right? So this is actually about the euro. What about the short terms? Well, you see nothing, right? The support hold it during Friday, stochastic and the RSI pointing up. There is kind of divergence here, kind of bullish divergence. I will not cancel the possibility of the euro to reach 136 again, but yes, I believe it will go and retest the 134 plus level here. Well, now for the recommended pairs. Dollar yen broke the daily triangle I've been talking about for a long time. Now we can see the RSI cross the 50. The stochastic is pointing up. Um, Actually, the bullish divergence that pushed up again and again. We have a kind of resistance here, right, around 44.50. But the real target would be actually, and the oops, sorry, the would be actually the 200 moving average, as you can see here, right? And of course, I don't think it will go and meet it on one time, but I do believe it will go and meet it up. The weekly chart also confirms the potential up move, and from the weekly chart we actually could see this level as a target 86. So I do expect the dollar yen to continue growing up. I'm pretty sure it won't happen in one way. I'm pretty sure it won't happen in one way. It will go and play around these levels, maybe even retest the triangle around 82.50. Maybe I will not guarantee it, but I do believe it will go and test the 85 level, and then we will reanalyze it. Actually, the investors are also expecting the retest for 485. So let's see how it happens. The New Zealandian dollar. Well, this is the uptrend line of the weekly chart. This is the uptrend line of the weekly chart. If it is broken down, we are going down more and more. But will it happen? Not sure. RSI is still above 50. Stochastic is still aiming up, and this is the uptrend line, which still holds the level. The support line of 76 also holded the last uptrend, right? Also holded the last uptrend. Well, we have a sideways move now. What's next? 1, 2, 3, 4, 5, 6 spots. The break should happen on 7th. Will it happen now? Let's give it a chance. Actually, the potential is high that it will break up. It will break during for the 7 spot. Sorry, but and if it breaks actually, then we will probably go and aim the 74 level again, maybe even lower, 73.50, right? So definitely a good pair to watch. What about the other pairs? Dollar franc, for example. Dollar franc raised up, meted the resistance. About the dollar franc, I've been talking for the previous week, right? It broke up after this bullish divergence, right? Now it meets the resistance, and what's next? Well, let's see. Let's see. If it breaks this level, it will go and test the parity level at least again. Will it happen? Not sure. I can't guarantee it will break this resistance so easy. It looks like it will. I bet like it will. I think it will, but I'm not sure it will happen during the first attempt. I believe it will retrace down and then try to do it again. If we take a look on the 4-hour chart, there is also kind of a bearish divergence here, right? Around these levels. So actually we could see some correction for this for all up move, for the all last up move. Right? We'll probably see at the beginning of the week we'll probably see a correction, and then maybe retest of these levels, and then we'll see it again. What about Australian? Australian is still moving on the wedge, as we can see. The bearish pressure is still powerful, as we can see, right? The bearish pressure is still powerful, but it's nothing yet. It's nothing yet. Until it's not broken, until the stylus is not broken, we can't go and do nothing for the Australian dollar. Alright, so this is about the majors. What about the crosses? Well, let's analyze a few interesting crosses. The euro franc continues to build the resistance. It has a critical resistance here around 132.80, 133 maybe. It is also the 200 moving average, and it is also a bearish divergence here. I do think it will try during the next days, it will try to test it, but then it probably will complete the divergence and starting going down. That's my expectations for the euro franc. Right? What about the other pairs? British pound against the Japanese yen, for example. Let's see what can we understand from here. The uptrend line was broken. It was risky to enter it because it fighted the 200 moving average. Then it broke up and raised, as we can see here, raised all the way to the uptrend, and now it's fighting also a bearish histogrammic divergence. Put attention that the stochastic still didn't cross, so we can't actually say it's also a bearish divergence on the stochastic. It still didn't cross, but once it will, probably we'll see some correction, but then I still believe that the British pound against the yen will continue to rise. And I will explain on the weekly chart. As you can see here, well, let me erase the unneeded lines. Just a second. All right. How does these lines appear suddenly? Unbelievable. Okay, as we can see here, it broke this downtrend line, right? Broke this downtrend line, and also the last downtrend line of the pair here. It still holds this resistance around 134. Once it's broken, we are going up for the British pound against the yen. Put attention for the RSI. It's also holding the 50 level for a long run, as you can see here, right? But now it looks like being broken. So I do believe it will go up, right? I do, for a very long run, it looks like going up. Also, the weekly chart, the monthly chart also confirmed it. I believe that from now on, the British pound will aiming up move. Okay, for long run. Well, that's about the pairs and my expectations. Now, what about commodities and indices? So, what about the gold, for example? Right? We have this the weekly chart. Sorry. All right. We have this weekly uptrend line. We have a triple small body. Now it's time for decision. Now it's time for decision. Once this uptrend line will be broken, the gold will aiming the down move. And this is still my expectation. Can I guarantee it? No. Because it's possible that we will have an up move for a double top here, for a bearish complete of bearish divergence, and then a breakdown. What will happen? No one knows. If we go to the daily chart, we can see that we had a correction, right? A 50 level here of the Fibonacci 50 level here, and we can actually see a hidden divergence here, right? We can actually see hidden divergence here also on the stochastic, right? So it looks like the gold continuing down. Okay, but still for the long run, we have to wait for the uptrend line being broken. What about the indices? Well. Weird situation. Weird situation. Because, just let me erase these lines. Because the divergence is here and it's critical. Divergence is here and it's critical. The resistance is here and it's also critical, as you can see, right? As we can see here, right? This is the critical resistance. The rising was also critical. We had a Marubozu. We have this bearish pressure of the MACD, right? Will it happen already? Not sure. The daily divergence is also here. The daily divergence is also here. But will it happen already? Not sure. Not sure that the big move will begin already. Right? But it will begin. That's for sure. Because if not this resistance, right, there is one more critical level, a little higher, as you can see here. Okay, it will happen, and once it happens, it will be really powerful. Really powerful. Is it a good time to join the up move? No. No. Why not? Because first of all, it already made a critical move. Second, there is no really reason for the long move because of all the world situation, of the all world political situation. Don't forget that during March, the HAL program of Bernanke during the end of March and the beginning of April will come to its end, and then we will see what's about to happen. Alright, so definitely we are about to have a critical situation. I do think that it's correct to enter and to be in selling opportunities, but with stop losses. And if the stop loss is reached, I believe it's very important to continue and look for another entry point, because once the the divergence completed, it will bring a critical down move, at least as it happened during the last time, and it was powerful. Right? What about the next indices? Well, all of them actually points the same. Watch this, friends. Right? We had a Marubuzu. We have a resistance here, right? We have a bearish divergence here, right? Histogram. So there is no place to run from. It could hold one more time, but once it happens, it will be serious, powerfully, and strong. The daily chart still still divergence the MACD moving average actually. So I believe it's only questions of when, not the questions of if. Right? Every other pair, every other index, sorry, actually pointing the same. Right? This is the FTSE, for example, which fighting this resistance. This is the bearish divergence of the histogram. Right? So it might, as I said, it might begin every week. It could hold 1, 2, 3, 4 more weeks, but it will happen. And we are reaching, we are almost there, we are already there, right? And it will happen. So that's why I think that it's very, very important to start and holding selling position, because once it happens, it's so powerful, then we can easily miss the opportunity to join. And one more important thing is we have a harmonic pattern here on the S&P 500. It's a bearish crab actually. We reached the critical level. It could and it should actually make the U-turn very, very, very soon. Actually, the target for such pattern is this meeting. That means that the correction could be very, 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 very critical. If not from these levels, the maximum level for this crab actually is the upper boundary. Right? So let's see how does it continue to develop. All right. So, friends, thank you very much for your time. And we are, as I said, not once. We are on critical situations, and we have another reason for that. That Bernanke's financial program actually begins to come to its end, right, during March and April, and many things are about to happen then. So thank you very much, friend, and I wish you a great week. Thank you for your time and good luck trading. Vladimir.